Now we are starting with this note now. Direct raw materials cost. Now let us start with the opening balance, if any. Opening stock on the 1st of March 2007. Here is the direct raw material. This is the opening stock. Now we say 20,000 as opening stock. Now we move to the transaction looking for any purchases during the financial period. Transaction during the year ended 29 February 2008. Number 1, raw materials were imported at cost of 440,000. Now we say purchases for the year. Just put it here. But in this activity, we don't have the returns. So we take the amount as it is, as 440,000. Now we move to the transportation. Number 2, the cost of transporting this material from the suppliers, 70,000. Do not forget we say plus the carriage on purchases. As how much? 70,000. Right. So we don't have any other information relating to the raw materials. Now we add. Let's add the opening stock, the purchases, and the carriage, because in this activity, we don't have the import duty, we don't have the custom duty. Let's add this together to get the material available for use. 20,000 plus 440,000 plus 70,000. Right. The total is 530,000. That is material available. Now we say less the closing stock. Closing stock. This is the stock at the end of the financial period. They say stock on hand at the end of the year, raw material, it is 40,000. We said 40,000 as a closing stock. Now we say less 40,000. 530 less 40,000 to get the total cost of the raw materials issued for production. Raw material cost issued in the factory for production. Now, another note is a direct labor cost. Direct labor cost. Transaction during the year. Information number 3. Salaries and wages paid. 5 factory workers at 5,000 per month. 1 cleaner at 2,000 per month. This cleaner works in the factory 50% of his time. And the last information under this, 1 office worker at 6,000 per month. Do not forget, we are preparing the notes at direct labor cost. So the focus will be on the cost of the factory workers. We have 5 factory workers in this manufacturing business, and each earn 5,000 per month. Do not forget, we are doing the statement in this question at the end of the financial year. So to do the calculations, we have to say, how many workers do we have? We have 5 workers. Each earn a salary of 5,000 per month. Then we say multiply by 12 to get the total salary of a factory worker. Now we say 5 multiply by 5,000, 5,000 and multiply by 12. The total direct labor cost will be 300,000. So when we prepare this note, we are starting with the factory wage. Factory wages. You can just show the calculations here. Now we got 300,000 as the total of the direct labor cost. Now this direct labor cost, it will be the factory wages plus the contributions made by the employer. Contributions such as the pension fund contribution, the UIF contribution, or the medical aid. But let's go and look at this activity whether we do have those costs as contributions. Information number 4. Pension fund. All employees except the cleaner contribute to the pension fund. The deduction from earnings is 7.5, while the business contributes 10.5 of monthly earnings towards the pension funds. You can also do the calculations. We have 5 employees. Each earn a monthly salary of 5,000. For how many? Okay. For how many months? For 12 months. The total is 300,000. Now, the business contributes 10% towards pension funds. So we are going to say 300,000 as the total salary or wage for the whole year, multiply by 10.5 to get the contribution of 31,500. Pension fund contribution. Do not forget we are taking the contribution made by the business, not by the employees. That will be 31,500. Then information number 5. The law states that 1% deduction will apply to earnings by all employees. The business contributes an additional 1%. Now we move to the UIF. UIF contributions. Do not forget we have the salary of 300,000 or wage of 300,000. So we are going to calculate 1% of 300,000 to get the UIF contribution. Here we go. Say 300,000 multiply by 1/100 to get 3,000. The UIF contributions will be 3,000. Now we add them together to get a direct labor. Direct labor cost. That is 300,000 plus 31,500 plus 3,000. So the total direct labor is 334,500. Now the last note in the production cost statement is a factory overhead or manufacturing overhead. Manufacturing overhead cost. Let us start with the indirect material cost. Like I said, the indirect material cost, because it is a fixed cost, it will be recorded under the factory overhead. Indirect material cost. We can show the workings. Now let's go to the question again. Looking for the indirect material cost. When we start this, do not forget, we start with the opening balance or opening stock of the indirect materials plus the purchases during the year minus the closing stock of indirect materials. But in this question, we don't have the opening stock. Now let's move to the transaction during the year. Number 6. Consumable stores purchased during the year. Factory use 33,500, sorry. For office use, 19,000. Do not forget we are preparing the factory overhead. The focus will be on the cost consumed in the factory. The cost of material consumed in the factory. Now we said because we don't have the opening stock, we are starting with the purchases, 33,500. Now we have the closing stock, unused indirect material at the end of the financial year. Factory consumable stores on hand, 1,500. So we say purchases minus the closing stock of 1,500 to get the indirect material cost consumed during the course of the period. 33,500 minus the closing stock of 1,500 to get the total indirect material consumed during the year, which is 32,000.